Hey everybody, welcome back to Managerial Cost Accounting. I'm Professor Martin. In our video today, we're going to be looking at cost behavior. As so much of what we do in managerial accounting is dedicated to trying to figure out what cost we have in creating a product or delivering a service. And we need to do that so we can make sure that, for one, we are charging the correct amount when we sell that product or service, but also if we have a situation where we have multiple products that we're manufacturing or multiple services that we are delivering, we need to be able to take some of the costs that we have and allocate them to the different things we have going on. That way we get an accurate reflection of how much it really takes to make that product or deliver that particular service. And in doing so, we can make sure that we're making money. And so that's a lot of what we have going on in managerial cost accounting. And today we're going to look at cost behavior, how individual costs might behave. So again, it kind of goes back to a lot of what we're doing. We're trying to get information to make good decisions from a management standpoint. Should we keep a product line or drop a product line? Imagine Roomba. Have you seen the little vacuum cleaners that go around your house and clean for you? They're amazing. I just bought one a few months ago during Prime Day through Amazon, and it literally has changed my life. I can sit in here and make accounting videos instead of being out there running the vacuum cleaner. So iRobot makes a Roomba, which is their vacuum cleaner. They make a Brava, which is a mop, and they make a mower now that runs virtually outside, without you pushing it. And they also have some programming tools that they sell to the public who are interested in learning how to program. So they have these different product lines, and at some point iRobot has to decide whether or not to continue funding a product line or whether to discontinue it. And in doing so, they really need to understand what costs are involved, because some of these costs that they might have from an overhead standpoint might be related more to the vacuum cleaners than the mowers. So they need to have good information to be able to make those decisions. Might also involve a segment. Look at General Electric. General Electric is a conglomerate. They're involved in a lot of different businesses. They have to have some kind of way through their cost accounting information system to be able to look at these businesses and evaluate them and say, well, maybe we should put more money in aviation, or maybe we should get out of lighting altogether. So that's kind of a little bit of a background on why we do what we do in managerial accounting. Again, we keep emphasizing we're not doing managerial accounting to make reports to give to the outside world. We're not concerned in managerial accounting with making balance sheets and making cash flow statements that we can provide to the investing community. What we're trying to do is generate information internally that helps us make decisions from a management standpoint. So kind of keep that in mind as we go through everything. The bottom line in everything we're doing in our video today, costs are important. We have to be able to identify them, and we have to be able to measure them. The costs just don't stand up and say, hey guys, I'm a variable cost. It's not that easy. So a good cost accountant is able to look and determine the nature of the cost and how they behave. We have to be able to understand how costs change in response to an activity. We'll talk about activity drivers, and those are the things that basically cause costs to happen. So we have to be able to understand how our cost structure changes as we produce more or less. And that's where we're heading. So our goal for right now is just kind of understanding cost behavior in terms of fixed cost and variable. And you can see right here, I've kind of got them isolated. So we're just going to kind of focus on that part right now and kind of ignore this part right here. How does a cost behave? And I said at the very beginning, caution, we have some graphs involved in our lecture. Don't freak out. A lot of people, they see graphs and their brain shuts down and said, I can't understand that. You can't understand it. We just have to break it down and take it bit by bit. So don't worry, we'll get to that in a second. So cost behavior is simply referring to how does a cost react when our level of output changes. When we make more items, how does that cost react? Does it stay the same? Well, if it does, it's a fixed cost. Salaries, rent, depreciation, if it's done on straight line, stays the same regardless of whether we make 0 units or whether we make 10,000 units. Does that cost increase or decrease with output? If we make more, do costs go up in total? If we make less, do costs go down in total? Then it's variable. Direct material and direct labor are two perfect examples of a variable cost. If we make 0 items, we need 0 material. If we make 1,000,000 items, we need a lot more material. So that cost is going to go up in total as our output goes up. Now there it is. There's our graph that I warned you about. Fixed cost, according to your book, is a cost that is in total constant with the relevant range as the level of the associated driver varies. That's a really fancy way of saying as we make more or less, it doesn't matter, the cost is going to stay the same. So if we look at the little graph right here, all the graphs that we do in managerial cost accounting, on the y-axis, the axis that goes up and down, that will be the cost in dollar amount. On the x-axis, it goes back and forth on the horizontal. That's the level of activity, whether it be products produced, machine hours, labor hours, whatever the activity might be. So you can see we got it graphed right here, cost on the y-axis, and we got activity on the x-axis. Now, I mentioned that the cost is going to stay the same in the relevant range. In this case here, we're talking about supervision cost. If we make 0 to about 100,000, we only need 1 supervisor. But the relevant range is the range that we would normally function at. You know, no extenuating circumstances, just a normal, practical range of activity that we would have going on. In that case, it would be 120 to 200,000. That's our relevant range. And at that level, we need 2 supervisors. So we got 120,000 bucks. But the important thing here to realize, notice on the Y, that line is perfectly straight. It goes right across because, again, it doesn't matter if we make 120,000 or 200,000. In that range, that cost is going to stay flat because we have to pay 2 people's salary. So that's fixed. The cost stays the same across that relevant level of activity. Variable, on the other hand, like we've been saying, goes up as output or activity goes up. So here we can see I've got the cost on the y-axis once again. I've got the activity on the x-axis. At 0 level of activity, at 0 level of production, I don't have any cost. But notice that linear trend, as I make more and more, the cost goes up. From 0 at $0 to $600,000 at the production level of 200,000. So we got a little cost formula here. 3x, the variable cost is equal to 3x, $3 times level of activity. X is the level of activity. So 3 times 200,000 gives me 600,000. So that's variable, and that's how that graph works. It goes right up through there. Now don't start thinking about economics. You're like, well, wait a second, don't we have to have another line going down that way for demand? We're not doing supply and demand graphs right here. We're just graphing the cost that we have. So we can make a formula for what we call our cost formula or cost function. Total cost is Y, and that is equal to our fixed cost plus our variable cost per unit multiplied by the number of units that we're cranking out, or level of activity, whichever way you want to look at it. So again, our cost formula is always going to be Y, or total cost, equals fixed cost plus the variable. So how do we determine cost behavior? The book goes through what we call the account analysis method. It also goes through an engineering method where you would actually stand and watch people work and then document it and keep track of the time they spent and kind of use that to determine the costs that are involved. We're going to focus on the account analysis method because I can't really have you all go to a factory and stand over people's shoulders and keep track of it. So we're going to do the account analysis method. It's real simple. We use judgment to divide the cost up into fixed and variable components. And once we do that, we just kind of calculate averages and per unit amounts. And I'm going to walk you through right now a problem in your homework that looks like that. And I think this is problem number 3 in your homework, in your problem set for the chapter. So you may want to just double check and look at the name and compare it to make sure. But we're going to run through this example. If you're okay with that homework problem, then you don't need to look at the example here. But if you want help with that homework problem, then you're going to want to continue on for the next 5 minutes or so. Alrighty, so I've got the homework problem up here on the screen now. And you can see account analysis method. You can read through the details. Just to kind of summarize, we have a beauty salon that is going to kind of open a tanning salon in the back. And the owner of the salon wants to kind of keep track of the cost of the tanning salon. And again, you can kind of think of this as another department of the business. The question that we might be trying to answer is, what should we charge people for a monthly pass to come to the tanning salon? Or maybe whether we should keep it open at all. Is it taking away profits from the business overall? So you can read through that. I've created an Excel spreadsheet. Now I can't force you to put things in Excel, as you're doing your homework there. You can write stuff out by hand. But I really encourage you to, if you're not comfortable with Excel, this is a great opportunity to start to develop those spreadsheet skills. Do your problems in Excel. One, you don't have to worry about losing papers. Two, it's easy to make corrections. If you find something wrong, it's easy to go back and fix it without marking out a bunch of stuff and writing it again. So I've got my data set up in this little Excel spreadsheet. I just kind of recreated it here. And we're going to go through and work the problems. This is the account analysis method of determining cost behaviors. So number one, calculate the average account balance for every account. Calculate the monthly amount for each of the two drivers. And so, wait a second, what are they talking about drivers here? The drivers are the things that create all these costs you're seeing there. She's got two activity drivers here. She's got tanning minutes. The longer the people sit in the tanning bed, the more electricity we need. She's got number of visits. The more people that come in to the tanning salon, the more they have to maybe maintain and clean and use supplies like wet wipes to wipe everything down and sanitize. So she's got two drivers. Those are the items that are kind of driving the cost that are involved in this enterprise. So back to number one here. We need to calculate the average account balance for every account. Those four guys right there. We need to calculate the average monthly amount for the two drivers. I'm just going to put a formula in here. And again, another thing the Excel spreadsheet is going to do for you, it's going to save you some time doing some math. The formula for average is equal average. I'm just going to kind of highlight, select those components. I'm just going to drag them on down. Now, those aren't dollar amounts per se, so I'm not going to let the dollar sign stay there. Well, I'm just going to put it like that. So that's number one, and we're just going to put in those averages because that's what the problem asks for. Now, in my experience in teaching managerial cost accounting, people want to make things harder sometimes than it really is. You look at that problem and say, well, that's too simple. That can't possibly be what they want. No, well, that is. Just think about what they're asking you, but don't overthink it. Don't make it harder than it has to be. If they're asking you for an average, then just calculate the average. It doesn't require any special knowledge here, really. 2490. I'm just plugging in my numbers right here. 4,900 and 450. Again, I'm just calculating the average and I'm pulling it down. Number two, calculate the fixed monthly cost and the variable rates for the account averages. It says round your answers up to the nearest cent. Always make sure you round in the fashion that they tell you to, and use rounded answers in all your subsequent calculations. So, real easy here. We've got these averages that are going on. They want a per visit and per minute amount. Well, we'll go ahead and give it to them. I'm just going to take that $24.90 right there for supplies and maintenance and get a variable rate by taking that amount and dividing it by the number of visits. Equal $24.90 divided by 450. And I get $5.53 if we kind of do a little bit of rounding there. So $5.53 per visit. That means every time someone comes in and visits the tanning salon, we're incurring $5.53 in variable cost. The rate for electricity, as in regards to supplies and maintenance. We'll take the amount of electricity, $463, and we'll divide that by the total number of tanning minutes. And we get 9 cents per minute. So we add those two up, and that's telling us that every time someone comes in the tanning salon, we're incurring about $5.62 of variable cost involved in that visit. So we want to have some kind of price structure, definitely to cover the variable, but also the fixed cost that we're getting ready to look at. Our fixed cost, it said in the problem, she's assuming wages are fixed and depreciation is fixed. So I'm just going to add those two together. So $1,890, $1,890 a month. So whatever we're charging people, we should be recouping enough to recover that $1,890 in fixed cost involved in it, as well as the variable cost of each visit. And you can see how this is important. If they just lumped everything together, you know, if they didn't break out the electricity, if they didn't break out the wages, if they didn't break out the depreciation, if they didn't do those things, we'd have no idea if the tanning salon part of the business was profitable or not. We just see the overall profitability. So that's why it's important to kind of understand these concepts, especially if you're working in an environment where we're doing multiple products or doing multiple different kinds of services. We talked about that cost formula a few minutes ago. We said that total cost, or Y, is equal to the fixed cost plus the variable times the level of activity. In this case, we have two variable costs. We have the supplies and maintenance, we have the electricity. So we're going to tweak that formula just a little bit to add in that second level of variable cost. So it'd be $1,890 plus the $5.53 per visit plus the 9 cents per minute. Now, the way we come up with the total cost is we would plug in whatever the level of activity was right there and multiply those two variable costs by the respective level of activity, then add it all together. And that's kind of what we're looking at number 3 here. Number 3, it says in April, Penny predicts there will be 360 visits for a total of 3,700 minutes. So those are the level of activity going on. We got 360 people, 3,700 minutes. You say, well, how does she know that? Well, she's making a prediction, you know, probably basing it on what's happened in the past, or maybe what happened in April of the prior year. So let's go ahead and do our formula here. Y equals F plus the variable cost times the level of activity, and then we're going to add variable 2 times the level of activity for that. So it's going to look like Y equals fixed cost, we said was $1,890. Remember, we took the wages and depreciation, added them together. So Y equals $1,890 plus $5.53 per visit multiplied by 360 visits plus that second variable, 3,700 times 9 cents a minute. So I'm going to set up and do the math here. We just kind of make a formula. And just like that. There's my fixed cost right there. I'm adding in the variable at that level of activity. I'm adding in that variable, which is the number of minutes at that variable rate right there. So I get 4,213.80, which is, if I round that up, I get $4,214, and I've kind of cut off my number there. So we'll round that up to the nearest dollar because that's what the problem says, 4,214. I'll check my work real quick. I like to check my work after I've worked through most of the problem just to make sure I'm on the right track. Look at that, green check marks everywhere. So I'll let you try to figure out number 4 right there using that information. It's very similar. All we're doing is adding a little bit more to depreciation because we bought a new tanning bed. So we just kind of add that in and redo the numbers. If you have any questions on that account analysis method or how to determine whether a cost is fixed or variable, throw them my way. I'd be happy to help. In the meantime, we'll go ahead and prepare to look at what we call a mixed cost. What happens when something has a variable component and a fixed component. We'll tackle that in the next video. I'll see you then.